morning, good afternoon, wherever you guys are at your part of the world. Now, before we begin, I just want to be sure that you guys can see me, right, on the camera. You guys can see my screen and hear me loud and clear as well. Most important is to be able to see my screen and to hear me. Right, if you guys are able to do so, please drop a comment in the question box below. I mean, I've already done the sound check with the FP Markets team, and the ladies there are able to hear me and see me as well. So I just want to double confirm that everything is all good. Thanks, Magun. I hope I've pronounced your name correctly. Otherwise, please don't take any offense. Thanks, Oscar. All right, so with that, generally loud and clear, can see the slides. All right, so let me begin. Right, this is really a new way of doing a webinar. May not be new for some of you, but with FP Markets, definitely this is my first time doing a live trading session with the peeps over here at FP Markets, right? And it is not so much a live trading session, but I want to value add and give you guys a live commentary, right, and also a proper analysis of the markets. Okay, so this is what we would like to do going forward, and this is what I hope I can also do to value add for all of you. All right, so before we begin, just take a moment to go through this disclaimer. A quick one is that the information contained in this material is really intended for general advice. Okay, it does not take into account your investment objectives, the time frame that you have, the financial situation, or your particular needs. So while FP Markets has made every effort to ensure the accuracy of information at the date of publication, at time of this presentation, FP Markets does not give any warranty or representation as to the accuracy, reliability, or completeness of the information contained in this material. All right, and but having said that, I as the presenter, you guys have my word that whatever I present is accurate at this time of presentation, and I do give my best. All right, and I'm not gonna shortchange you guys, right? Because this is the basic respect that we have. You guys take time out of your busy schedules to spend it with me, and this is the least I can do. Okay, so this is the general structure that we have for the next 50 minutes or so, right? Normally what I'll do is to cover the market sentiment, all right, to provide a overarching view of really whether the market is generally risk on or risk off, right? And then I will move on to previous trade review. But since this is really the first time that I'm doing this, there's no previous trade to review, right? So I will start looking more at the markets, right? And then I will go through the trade setups. I'll show you guys where I think the best entry, where I think the stop loss, where I think the take profit, partial take profit should be. If it allows, right, I will also show you guys how to manage that trade, right? Should we take it? Okay, and then of course, I know for presentation purposes, I always put Q&A at the end, but what I like is to have that interaction, right, with you guys. It's a bit tough because I'm talking into a screen, I'm talking into a camera, but I prefer more of the interaction kind of thing. Okay, so if any of you have any questions, all right, to clarify with me anytime throughout the course of this presentation, please feel free to stop me in the middle of my presentation and just ask me a question. All right, no need to raise the hand. All right, just ask me a question in the box on WebEx, and I will do my best to answer you guys ASAP and as quickly as possible and as accurately as possible. All right, so Magun, you're asking where in the world am I and the time, please. Where in the world am I? Sometimes I wake up and I don't really know where in the world am I, except in my own bed, right? But jokes aside, I'm based in Singapore, right? And over here is +8 GMT. We don't have daylight savings over here. So over here right now, it's 4:05 p.m. in the afternoon. All right, so hope that answers your question. It'll be interesting to know where you guys are based at as well, right? Okay, so with that, let's take a look at market sentiment. All right. Yeah, so how I really start the day, right? Trading and analyzing the markets is I like to get a feel of where the market is positioned, right? The risk sentiment or the market sentiment, as people like to call it, right? You guys will, for the more experienced ones, you guys will know what risk on and risk off means, what the Fed means when they say that the Fed is dovish or the Fed is or the US Federal Reserve is hawkish. For those who are fairly new, all right, this will be a very good discipline to have. Okay, trading is nothing like investing, right? In investing, if you find a good stock, right, you can cost dollar average down, right? I mean, you guys probably see the meme going around, right? I was told to buy the dip, right? So I bought the dip, and the dip kept dipping, right? That kind of thing. Okay, so investing you can do that, all right. But trading you can't. Okay, investing normally attributed to the famous Warren Buffett. He's generally always quoted as saying, you know, I like to be greedy when others are fearful. I like to be fearful when others are greedy, right? So that works for investing. Okay, the man's a legend, right? Living legend. That works for investing. In my own opinion, okay, that does not necessarily translate to trading, right? Because trading, you're in and out of the market. It depends also on your time frame, right? Some of you are scalpers, some of you are intraday day traders, some of you are swing traders like myself, some of you are position traders, and then of course there are the investors that really hold for the long term. Okay, so with that, it's always good to position yourself in line with market sentiment for that day. All right, if you want to turn a profit in the day, there's no reason that you should be trading against the market, right? The trend is your friend, right? So that's always something for you guys to remember. Okay, so very quickly, for the benefit of those who are new, right? I'm just going to put it over here. Two things that we try to always come to a conclusion on whether the market is risk on or risk off. Now, what this means, generally when the market is risk on, right, it means that, you know, traders in the market, participants in the market, they are greedy, right? They are risk loving. Okay, so you tend to see, if you're trading FX, okay, you tend to see the Aussie, the Kiwi, the Euro, the Pound, and especially the Canadian dollar, right? Strengthening, right? They're just up and away. Okay, and that's risk on. So that's in terms of forex. If you're risk on in terms of the commodities, right, you will see commodity like oil, okay, just strengthening, right? Very bullish. Prices of oil will be rising. That's when the markets are generally more risk on. Okay, and of course, the flip side, okay, the flip side will be risk off, and that's the opposite. So if you're trading the FX market, okay, and you're risk off, okay, normally you tend to see that Japanese yen, okay, and the Swiss franc, right, they tend to be very bullish, right, because they are seen as risk neutral, risk haven as FX pairs. Okay, the dollar sometimes can be a good proxy for risk on, risk off as well, but it's a bit confusing because there's this thing known as the dollar smile theory. Okay, in the interest of time, you guys should read up on it. It's very interesting. Okay, dollar smile theory, go read up on it. It says that the dollar tends to strengthen when the US economy is doing really well, and the dollar also tends to strengthen when the US economy is doing really badly. All right, and that is because of the very special characteristic of the dollar being the world's reserve currency, right? So that's only something that can be that's only something that can be attributed to the USD, right? So dollar, take it with a pinch of salt. Risk off currencies will normally be the Japanese yen and the Swiss franc. Risk off current commodity will be things like gold, right? So when like the financial crisis, right, in 2008, okay, nearly every market was crashing. However, gold prices were going up, right, because gold is seen as a good store of value, right? That was the idea behind gold. Okay, and that's a risk on, that's a risk off commodity. Okay, so what happens to the stock index, right? When we are risk off, okay, the stock index S&P will fall, right? Because stocks are seen a bit more risky, and people don't really want to buy into overly highly high valuation in the stock index. Okay, they'll take their money out and put it in gold. They'll take their money out and put it in the US bonds, right? Because in a very risk-off environment where investors are fearful, investors want to invest in something that is safe, right? They tend to buy bonds. Why? Because bonds are backed, especially government bonds, right? Not corporate bonds, right? So they tend to buy government bonds because they believe that the government, in an economic fallout, the government is the only institution that can print enough money to pay back, right? To pay back the debt instrument. Okay. However, I would say that this really only applies to the US because the US dollar is really the world's reserve currency, right? And that is why this special treatment can only be attributed to the US. All right, so I hope you guys are risk on, risk off. You guys are, for those who are new, you guys are clear about risk on, risk off. Don't worry, after a few more sessions, you guys will generally know how to come to your own conclusion of whether the market is risk on or risk off. All clear so far? Okay, so with that, I'm going to move on, right? Very quickly. It's a very simple table, right? I like to keep things simple. I don't like to overcomplicate the chart, like my lecturer used to say. Okay, the problem with PowerPoint is that it has a lot of power, but there is no point, right? Because you can just put a chunk of words there. If the chunk of words are there, you can just let your people read them, right? People can read it themselves. Okay, but I like to just keep it simple. All right, so Oscar, you're asking, do I think that Bitcoin is now an alternative to gold, risk of investment? My own personal opinion, right? You guys can agree to disagree, but my own personal opinion is that at this point in time and over the next 1 to 3 years, I do not think that Bitcoin is going to be a good alternative to gold. Okay, a lot of people will say, oh, you know, but Isaac, yeah, Bitcoin exists in limited quantity. However, I have personally done a correlation study on Bitcoin, the S&P index, the US 10-year yields, right, and gold, right, and in terms of correlation, okay, Bitcoin actually behaves more like the S&P index rather than gold. Okay, so that's something that is very interesting. All right, and you guys can also go and try it out yourselves, looking at the correlation over the long-term period, right? And you realize that Bitcoin tends to move in line with the stock index rather than gold. So at this point in time, no, Bitcoin should not be an alternative to gold. Okay, gold is still in my opinion, the ultimate risk-off asset class that you guys would want to buy into, right? If there really is a financial fallout again in the next 1 to 3 years. Okay, so that's something for you guys to think about and consider as well. All right, so Oscar, I hope I've answered your question. Okay, so back to the market sentiment, right? These are the 4 asset classes that normally I look at, okay, to get a risk, to get a feel of the market sentiment. All right, I know some of you only trade FX, right? And I also know some of you probably only trade stocks. Okay, but with such a highly connected market that and world that we're living in the world today, right? Failure to look at across assets, okay, is akin to driving a car, okay, without your rear view mirror and your side mirrors, right? It's not that it's impossible, it's just that you won't know what's going on behind your car and to the sides of you. All right, so it's very important to look at intermarket correlation. All right, and from my previous dealings with traders, portfolio managers on the buy side, okay, big name financial institutions, these are the asset classes that they look at as well to give them a sense of risk sentiment, right? And it falls under this thing called the global macro strategy. All right, so let's look at the S&P first, right? I have summarized it here in to save time, right? The S&P is generally bullish. Okay, the US 10 over here, I'm referring to the bond price itself. Okay, the bond price. I'm not referring to the yield, right? The interest rate. Okay, so when people talk about the US 10, okay, this is a bit special. When people talk about the US 10, okay, they are talking about the bond price. Okay, they are talking about the bond price. When they're talking about the 10-year yields, okay, the 10-year yields. Give me a moment. All right, this means they are referring to the interest rate. Okay, they're referring to the interest rate. All right, so bond prices and interest rates and bond interest rates are inversely correlated, right? So if bond prices increase, interest rates fall. Bond prices fall, interest rates increase. All right, so I will quickly show you guys the charts in a while, but for me, the US 10 bond price is sideways. Okay, and then after that we move on to DXY, which is the dollar index, right? So it's basically the US dollar measured by comparing its strength against a basket of currencies, right? So this basket of currencies, if I'm not wrong, the euro is the highest weightage, followed by the franc, and then after that is the pound and euro, followed by Canadian dollar, followed by the pound, and then the franc, and then the Japanese yen, right? If my memory serves me well. All right, so we have to look at the dollar index, and the dollar index is important to know as a general picture, right? Whether the dollar is strengthening or weakening. But I'll show you, without looking at the charts, I'll show you guys a cheat sheet way of how I do the dollar index analysis, right? I don't even have to look at the charts, right, to know whether the dollar is strengthening or weakening. Okay, and then of course the last asset class that we look at is the VIX, right? Otherwise known as the Volatility Index. Okay, so the Volatility Index is also known as the fear gauge, right? It's also known as the fear index, fear gauge, however you want to call it. Okay, right? It is actually based off the volatility of the S&P, right? So historically, on average, the VIX should be fluctuating around the 26 level. If it breaks above the 26, that's when we start seeing a lot more volatility kicking into the market, and that means the higher the volatility, the more there is of fear, right? The higher the fear in the market. So when the VIX is above 26, you tend to hear a lot of people on CNBC, Bloomberg, right? They'll start to say, oh, are we at a risk of a sell-off now, or the market's heading into financial turmoil, right? A lot of messages of fear, and that causes the VIX to go even higher. All right, so once we have the directional, or rather once I have the directional bias of these four asset classes, right, I tend to put it together, and I have to come to a conclusion whether are we risk on, are we risk off for the day, or are we risk neutral, right? So mix. Okay, so that is something that we'll think about. So let's quickly go through the charts. Okay, so on the right hand side, okay, I have let's take a look at the S&P. Okay, but I will look at the futures. Okay, because the US market's not open yet. All right, but if you look at the futures on the daily, right, it's actually going higher, right? The futures is actually moving higher, it's actually pushing higher, right? So definitely bullish on the index, right? You're bullish on the index. So when you're bullish on the index, this means you are risk on. Okay, so people are a bit more greedy, right? In fact, we are making all-time highs on the index, right? So that's the index. Okay, and then let's quickly move on to the US 10-year bonds, right? So the bonds here, the bond prices, okay, for me is actually downwards trending. All right, it is within a broad range, right? It is within a broad range. Don't forget this is on the daily chart, so we are within a broad range. However, if you ask me, it is still downwards trending, right? Only if we break above this level, okay, then if the bond prices break above this level, right, then I will say that a double bottom pattern has formed, okay, and then I will say that bond prices are starting to increase. But for now, because it's in a broad range, it's doing a base at the bottom, I'm keeping it as neutral, right? Though on the trend, it looks like it is on a downtrend. I prefer to keep it as neutral. All right, and I will overlay the yield, okay, the US 10-year yield for you guys, okay? So that is US 10-year, yeah, okay, so 10-year yield, right? You guys can see on TradingView is a bit different. One is the US government bonds 10-year, one is the US government bonds 10-year yield. All right, so the 10-year yield, okay, you can see that the movement is going in opposite direction, so they're inversely correlated, right? There's a lot of news about the US Federal Chair, Jerome Powell, looking at the rates. So this is the rate that he's looking at, right? Yesterday it was around 1.7. Today it dropped down to around 1.65. I think the Fed will only start to worry when the yield prices, okay, goes up to somewhere at 2%, right? At 2%. Okay, so this is just something for you guys to take note of. All right, so yield prices are keeping constant, are doing a base, right? It's really going sideways. The yield is going sideways, the interest rate is going sideways, and bond price is basing within a broad range. So therefore, I'm keeping it neutral. All right. Okay, so very quickly, we've done the S&P, we've done the US government 10 bond, 10-year bond, right? Let's look at the dollar index. Okay, so dollar index, let me remove this. Okay, so dollar index, right? While it is on an uptrend, okay, on an uptrend, over the last few days, right, over the last 1 week or 2 weeks, okay, it actually has been on a down. It's been pushing lower. It's been weakening, right? It's been weakening. I am thinking, okay, if I were to zoom out a bit, right? If I were to zoom out a bit, okay, and do a retracement of this last push, high to low, and open our Fibonacci ratios, okay, the dollar index is actually reacting below the 76.40, 78.60 retracement level. All right, and if you want to draw a trend line, you can actually have a trend line over here, something like that. One touch, two touch. The color is a bit hard to see. A one touch, two touch, three touch. I'm thinking it could pull down slightly lower. All right, to somewhere down here. Give me a moment. Let me just tidy this up. All right, to maybe the 61.8 retracement as well. Okay, to the 61.8 retracement. So I'm personally bearish. Okay, I'm bearish on the dollar, right? So I'm thinking the dollar could just pull back a bit, right? Before maybe strengthening in the long term. All right. So that's just something for you guys to think about. So the dollar for me is dipping. Okay, and last but not least, let's look at the volatility index, the VIX. Okay, so the VIX chart on the daily looks very weird, right? So when I look at the VIX, I tend to look at it in closing price. And like I said, on average, it is actually the 26 level. So you can actually adjust this. Okay, so 26, just nice. What I'll do is something like that. I just have a line that stretches to infinity, and I just show you guys, okay, whenever we are above 26, right, that is when we start seeing a lot of negative news. Okay, so there was the 2010, right? I think 2010, this level here, I think there was the flash crash. Okay, so it was above 26 and it was just going on here, and then 2011 there was a bit of fear of the market crashing again, so volatility was high here. You can see that, you know, in September 08, right, 1 month, I think 1 month before the financial crisis really just blew off across the global markets, right? The VIX started crossing 26, right? It was actually in August, okay, August, that there was ripples, echoes, smoke of the financial crisis falling out, happening, but not until suddenly in September when the VIX crossed above 26, and then that was when the whole thing just exploded, right? And more recently, we have the COVID case, the coronavirus pandemic, right? Slightly more than a year ago, February, right? That was when quite a number of countries were reporting that, hey, you know, there's this flu-like symptoms going around, and that was when the whole thing just spiked up, right? Volatility went all the way up, and it was not only until recently, a year later, that we are back below 26 and we're actually going lower. All right, so back to the dollar index, right? We looked at the chart, but I want to show you guys, okay, you guys can actually go to this website called finviz.com. Okay, and under Finviz, you can go to this place called Forex at the top. You can click on Forex. Just click performance right over here. Okay, ignore this ad. Okay, now the performance here is very simple. You can just sort it on weekly, right? It is really the most accurate, okay, when we are towards the end of the trading day on Tuesday. All right, that is really when it's the most accurate. So how does this relative performance for the dollar work? Is that it compares, okay, it compares all the currencies, the 8 major currencies, all right, against the US dollar, right? So the US dollar is always flat, right? It's always flat. Anything to the left, okay, anything to the left of the US dollar is stronger than the dollar, right? Anything to the right of the US dollar is weaker than the dollar. Okay, so now the dollar is in the middle. All right, you just have to see which are the currencies that are really outperforming the dollar. Is the franc and the yen, right? So those are the risk off currencies, right? And then you have the CAD and the pound, which is really underperforming the dollar. All right, so people are actually dumping CAD, people are actually dumping pound, they're actually buying up franc, they're buying up yen. So the market, based on this 1 week relative performance this week so far, over the course of this week, all right, the market is generally more risk off. All right, but if you want to know about today, you can sort it by D, all right, on the top right hand corner here. You click on the daily, all right, it will show you, okay, that the dollar is actually towards the tail end, and it's really a mixed bag, right? You have the yen, but then follow closely behind the yen outperforming the dollar, you have the Kiwi and the Aussie. So it's really a mixed bag. Okay, it's really mixed. So the risk sentiment on the daily for today is mixed, right? So putting everything together, do you guys want to give it a shot to try? Okay, let's test it now. All right, and see whether are you guys, do you think the market is more risk on or is the market more risk off today? Right, today. So you just give your answers in the question box below, all right? Okay, so I've got some answers saying risk off, neutral to risk off. All right. Okay, I would say that the idea is that the market is more risk neutral, so it's really mixed, right? Why mixed? Because don't forget the S&P is making all-time high, right? And when the S&P is making all-time high, okay, that is when we are risk on. Okay, so let me just sum it up here, right? Okay, so let me just sum it up here why I say that I came to a conclusion of mix. Okay, so risk on, all right? So S&P is higher, risk on. The bond prices are basing sideways, so it's mixed. Okay, when we are risk off, bond prices will go higher. When we are risk off, bond prices go higher. When we are risk on, bond prices go lower. So we are mixed. Now it's really going sideways, right? I'll just say it's neutral. Let's ignore this. Now the dollar index, okay, on the short term, the chart that I showed you guys, okay, is actually on a downtrend, right? So the dollar is going down. That means it is more risk on. However, that we saw on Finviz, all right, the dollar is okay. Let's go back to it. As we see on Finviz on the daily, the dollar is towards the end, okay, but then we have a mix of different currencies that are outperforming the dollar. So it still means that the dollar is really the underperformer right here. There's nothing that the dollar is outperforming except the Canadian dollar. So the dollar is the underperformer. It ties in with the chart analysis here, right? The dollar is the underperformer, which means this is risk on, right? And then of course the VIX is low, right? The VIX is low, it's below 26. Okay, it's getting lower. There's not much volatility coming into the market. Generally, it should be also risk on, right? But for me, I give a bigger weightage, right, to this one, all right? Okay, so I give a bigger weightage to these two, right? The bonds and the indices. And because these two are, one is risk on, one is mixed, one is still basing, I would still prefer to be on the prudent side, all right, and keep it as risk neutral. All right, so yeah, Magun, you're right, it's neutral. Okay, so just be careful. Go through the asset classes step by step. come to a different conclusion for each individual asset class, then put it all back together again to get your market sentiment for the day. So if you're risk neutral, it means that anything can be played, right? You just got to watch our stop loss, our risk management for our trades. Okay, that is how I actually do the market sentiment, right? So risk neutral. All right. Stefan, you are actually asking a question, how do I get started on Fxtm? All right. I think this Fxtm is not the FP markets brokerage, right? But if you want to get started on FP markets, you can actually just head over to the FP markets website, all right, and open a live account with them. Okay, Richard, you're asking, can we start live trading? Yes, we can, right? We are already actually doing it. You cannot just jump into the market blindly without knowing the temperature for the day. All right, so I hope you've been following. So yes, Oscar, you're right. Number one rule, check market sentiment. That is very important. It's a very, very important discipline to build. All right, so with that, let's move on to the next one where, like I said, we have no previous trade review because this is the first time we're actually doing this this webinar. So let's move on into the trade setups. All right, so how would I normally pick my trades for the day, right? You can actually go to FP Markets website, right? And you can also go, or you can go to any economic calendar, right? I think there is resources and then economic calendar. Look for, if you're a news trader, right, you can look for the news with the highest impact, okay? And you maybe want to trade around the timing that the news is being released, okay? Otherwise, if you're like me, a swing trader, generally I can also go to Finbiz, set it to the weekly, right? And I see the franc outperforming the dollar so much and the pound underperforming, I can normally trade the pound franc, right? So that can be one of the pairs that I look at. All right, so let's go into the markets. Okay, so I'm going to open up pound franc. All right, and as normal, I always start off with the biggest time frame because the trend is your friend, and if you trade against the trend, you're pretty much dead, right? Okay, so if we look on the monthly, okay, just this area, right? Price has already made a base, okay, and has pushed up to the previous area where price made a drop. Okay, so we are actually approaching a very strong resistance area, a very, very strong resistance area. So it's just something to take note of, right? Oh, sorry. Okay, and now that we have our monthly resistance, let's quickly go down to the weekly. All right, the monthly, I'm just looking for strong close. I'm looking for strong resistance or support nearby. All right. So we already see that price, okay, on the weekly for this week, right? The pound just made a bearish engulfing. The pound franc just made a bearish engulfing. Based on this candlestick pattern, since the week is about to end, right? We're more than halfway through the week, all right? Unless there's a very huge pullback today, right? I don't think this shape of the candle is going to change much, right? We can tell ourselves that, look, it's probably going to be bearish over the next few weeks as well. And we see that the markets have based over here, right? It started off with a push up here, okay? We can actually do a Fibonacci retracement of this last move from the low to the high, right? And we see that the price is actually testing, all right, the 23.6 retracement level. All right, so 23.6, we can actually put our first support over here. We're going to use it as green to identify support. All right, our monthly resistance is quite close to the negative 27.20, so that's just something to keep in mind. All right, and what I like to look out for is combining graphical levels with Fibonacci, strong Fibonacci levels, right? For me, my personal belief is that, you know, graphical levels are always important. Fibonacci can always change, right? But graphical levels, once they are posted, they do not change. Okay, so 61.8, there's a graphical overlap support here. In close, you can also see it, right? So we have two levels of support, okay, for the pound franc. All right, let's delete this Fibonacci resistance, retracement. Let's quickly go down to the daily. Okay, on the daily, this is what I currently see, right? It seems like price is making, okay, it seems like price is making a double top pattern, right? There is a strong preceding trend. All right, price makes a high, pulls back, okay, sorry, pulls back, and then makes roughly the same high. Okay, it's never exact in the real markets, nothing like the textbook, and then comes back now and is testing the low, right? A break below, a breakout retest and pullback confirms the double top pattern. All right, so that's just something for you guys to take note of. We are seeing a double top pattern being formed right now. Magun, you're asking on Fibonacci, do I do low to high when bullish and high to low when bearish? Okay, I draw in the direction of the trend. All right, in the direction of the trend. So just now, okay, on the weekly, right, the trend was up, right? The trend was up. That is why I draw from low, right, from low to high. Okay, that is how I do that. All right, if the trend is down, okay, so if on the daily, right, we see that price currently is pushing down, all right, then I will draw from high to low. But I don't like to do it on a movement like that when price action is not completed yet, because if price push lower, then I'll have to drag my Fibonacci lower. Price push lower, I have to drag it lower and lower and lower, right? So like I said, Fibonacci levels can always change. Okay, so one thing to note on the daily, right, if I were to draw a trend line, okay, I would probably start from somewhere over here. Okay, the trend line has already been broken, right? So price could very well do a, okay, like I said, a breakout. Okay, two ways, right? It's a double top. Price could break out or retest the double top, come back down, or price broke the trend line, could retest the trend line, come back down. Okay, so nothing much to see on the daily. Let's go down to the 4 hours. Okay, on the 4 hours, we can tidy things up better, right? I want to focus on this area here, nearer. Okay, price is basing. Remember, this is the weekly 23.6 retracement, right? So we can see that price has also broken this trend line, all right? And there's a strong push down. Okay, there's a strong push down. So I'm going to take a high to low. Now, on the daily, I did not take this retracement, but now on the 4 hours, I take this retracement. Why? Because right now price is basing around here. Even if price were to go lower, it would not have changed the fact that price based around here before. All right, so let's put the levels in. I'm thinking that if price really reacts above this level, 23.6, it could bounce up to the 61.8 or 50% level. Okay, again, I prefer to use graphical. I weigh graphical more than just Fibonacci levels. All right, so this is my upside target. If price bounces above this level, this is my upside target, right? Price could very well come up to this level. Okay, that is one. Okay, if price breaks below this level, okay, I can play to the last swing low over here. All right, so graphical level more important than just pure Fibonacci. Okay, so I'm just, what I'm doing is I'm identifying all the key levels, right? I'm identifying all the key levels, and then I will fine tune, right, my idea. Okay, so of course this is the weekly level. Sorry, the daily 61.8 is too far. Okay, it's too far, so I'll ignore it for now. I'll just keep it on the charts. All right, but I have the resistance here, a near-term support, and another downside target. So this I can consider it my pivot, right? I can consider it my pivot. Where's the pivot? Yeah, something like that. Okay, Bartholomew, you're asking, do I use Fibonacci as my main trading strategy? No, but Fibonacci is a very important tool, right? And I will recommend that you use it as part of your arsenal of trading toolbox. Okay, so now that we're done on the 4 hours, let's go down to the 1 hour. Okay, so on the 1 hour, I'm just going to focus on this area here, right? Now, let's look at how the market price has moved. Okay, look at how price is moving over here. All right, price pushed down, came back higher, came back down, went sideways, came back lower, bounced higher, came back down, is trading sideways right now. So there are a few movements. I can take a retracement. Okay, I've already done a retracement from this high to this low. Now I can take a retracement from this point, all right, all the way to this low. I can also take a retracement from this point all the way to this low. All right, so this is how I'll do it. I'll just use a Fibonacci high to low. Okay, and we see that the 23.6 is here. I can draw another Fibonacci again, just trying to find the confluence level. All right, and I see that the 61.8, the near term 61.8, if you guys can see, the shorter term 61.8 is in line with the longer 23.6. So that seems like a good level to wait for a breakout if we need a confirmation. Okay, so we can do a buy entry over here, right? Something like that. Okay, so a buy entry, if I were to remove all this, okay, how a buy entry will work is if price, okay, breaks and closes above this level, I can go long. All right, I can go long. Okay, if price breaks and closes above this level, I can go long with this upside resistance as my take profit. All right, alternatively, if price breaks below this low, okay, and closes below, right, this becomes my sell entry. I can also play the drop. All right, I can wait for a breakout and a close, and I can play a drop down to the downside. Okay, so the idea is to identify the key strong levels on a bigger time frame and then fine-tune your trades on a lower time frame. All right, Oscar, you are asking just a new question. Why would sometimes trader trade against the trend? Okay, trading to put trend line below of it and make it bearish even though they know it's a move upside. Okay, very simple. All right, to answer your question, you need to know the difference between a retracement and a reversal. All right, very quickly, okay, the market, okay, moves, right? If let's say it's in an uptrend, right, the market goes higher, it pulls back, goes higher, it pulls back, goes higher, right? In an uptrend, the market makes higher highs, the market makes higher lows, right? So you know that the long-term trend is up, but my question is, what happens if you are here at this point? Okay, are you going to play bullish? Yes, you can play bullish, but it really depends on your time frame and where your stop loss is going to be. But if this is the daily or the monthly and you are intraday trader, it will make more sense for you to play a short-term drop, right? But you have to keep in mind that this is a retracement on the bigger time frame. So with that, on the daily, you have to have a good risk management. You have to have a tight stop loss, all right, so that you do not get stopped out. Or even if you don't have a tight stop loss, keep your position size smaller than usual, right? So you take on less risk, all right? But if you are somewhere over here and you know that the trend is up, then of course you can, open it with a bigger lot size, a bigger position, and play higher, right? So it is okay to trade against the trend, right? But you have to be very, very clear which part of the trend you are on. Are you in line with the bigger trend, or are you in a retracement of the bigger trend? The same is true for the downside, right? When markets are bearish, okay, when markets are bearish, all right, price makes lower low, lower high. So you need to know where you're at, all right? So all these are retracements, okay? It is only a reversal if, let's say, price is going higher, price is going higher, right? And instead of coming back a bit, okay, price actually pulls back lower, right? And it makes a lower low. This is the first clue to tell you that, hey, market could be reversing, right? It has gone beyond the previous low. So that is a reversal, right? It is different from a retracement. Okay, so I hope that is clear. Okay, Oscar, I hope that answers your question. All right, so back to our pound franc. All right, this is something that these are the levels that you can actually watch. Okay, so I'm just going to leave it here. You can take a screenshot if you guys want to. All right. Alternatively, if you're very bullish, okay, what you can do is your buy entry, you can put it here, and this can therefore become your stop loss. Okay, so you just play up. The moment it breaks above is a buy a buy stop order. Okay, you just play it up with this as your take profit, right? And if price actually goes up, okay, goes higher, good for you, right? But if price reverse and suddenly takes you out, then you know that on the rejection, okay, you can flip the trade the other way and play a short down to the alternative target. This is why we always identify the key levels on the bigger time frame. All right, so you know where your alternative case lies the moment the market moves against you. All right, but what I like to do is, let's say price has gone in the direction that I like, right? Price has gone higher, sorry. Let's say price has gone higher, right? and price is somewhere over here. What I like to do is I like to move my stop loss, okay, to just a few pips above my entry to protect, okay, to cover up for the swaps, to cover up for commissions, to protect my movement. So this way, even if price comes back down, I'm break even. Okay, the idea is not to have any losses. Okay, it is possible, but you just have to be very disciplined. All right, so I hope that answers your question. I'm just going to leave the pound franc chart here. Now, very quickly, okay, Ivan, you're asking how can we backtest my multi-time frame idea? In short, there's no need to backtest because my multi-time frame idea really works. All right, I have backtested it for you, okay, and we always and the team at Everest Fortune Group, we actually use it. But I'm going to share with you guys a platform later that you guys can actually use, put up your analysis, and then after that you can go and see how the multi-time frame idea works. Otherwise, if you have TradingView, you can also backtest it on TradingView. Just toggle between the time frames. Okay, so now let's look at one of the setups that I really want to highlight for today. There'll be gold. Okay, so gold, let's start off with the monthly. Go on the monthly, we have a double top pattern forming. Okay, if you guys cannot see the double top, just change it to a line chart. You can see it, there's a double top, there's a breakout already, and price seems to be coming back to test the neckline. All right, so I'm just going to key in all the key levels. All right, we have a neckline here, a resistance. Where's my resistance? Red. Okay, and then after that, of course, the last swing low over here, I'm going to put it as green. So we identified the key support resistance. Let's quickly go down to the lower time frame. All right, why did price react over here? If you guys were to see the real up move, okay, started from this point, we can use a Fibonacci retracement. The trend is up, so we draw a Fibonacci retracement from the low to the high, and we see that price came down, tested 61.80 twice, once over here and twice. All right, so it seems like price is making a limited push up towards this double top neckline, okay, on the monthly. No other levels to identify, okay, right now, because these are very strong resistance and support level. But we also see that from this point, price made a push down. So I'm going to use Fibonacci in the direction of trend, okay, high to low. All right, we see that this is a graphical overlap resistance, okay, and it's also a 38.2 retracement level. All right, so definitely it is quite key. Okay, so very quickly, let's go down to the daily. So on the daily, right, we are seeing a double bottom pattern forming, right? For those of you who are less risk averse, you guys can actually wait for a break of this double top, okay? Not the best risk reward in my opinion, right? You can wait for a double top breakout, pullback, and then just play to this target. But if you ask me, by the time it breaks out, you might miss the move already. Okay, so not to worry. Okay, you can just put a small intermediate intraday resistance over here, right? And then let's quickly go down to the 4 hours. So we're starting to narrow our area of focus as well. Okay, so on the daily, we were focusing. On the daily, we were focusing around here. On the daily, we were focusing around here. Now on the 4 hours, I'm going to focus around here. All right, so on the 4 hours, let me just tidy up the charts. So long-term target, right, is over here, this take profit. Okay, price could push up to this level. This is a short-term resistance. Now we also see that price has pushed up, okay, made a high, came back down, made a low, okay, price pushed higher to this level here, moved higher but immediately rejected. So we'll just take the last movement, okay. And since the direction is up, let's draw Fibonacci retracement from the low to the high. All right, and we see that there's a 23.6 over here. So this can be our strong support level, right? Can be our strong support level. Okay, so I've identified a strong support level. If you want to put another support level, if you want to put another support level, it is possible to put it at a 38.2, okay? But I prefer to use graphical, so I'll put it at this last swing low. So it's the 4 hour, 23.6 and 38.2. However, why I already entered on gold is because, right, if I were to show a trend line, okay, there's already a trend line breakout pullback, right? Could enter on this pullback, and I'm just playing to this first target, and then possible second target. Okay, but there's already a trend line breakout pullback. Let's go down to the 1 hour. Okay, so even on the 1 hour, this is what we have, right? Looking at market structure, price, the reversal here was confirmed, right? There's a left shoulder, a head, a right shoulder, a break of the neckline, boom, price goes, right? And then price breaks out of the trend line. Okay, tidy this up a bit, try not to cut the candle body, right? So you see that there's actually a breakout, a retest, 2 chances for entry, all right, and then price went higher. And if you were to draw another trend line, a shorter term trend line, you can see that price is holding very nicely along this trend line as well. Okay, so what I would like to do, okay, is that, you know, do a retracement of this last move, low to high. Okay, you see the negative 61.8 falls in line with the graphical high, which is the daily double bottom neckline, right? So this is a strong level, all right? This can also be your intraday take profit. All right, and if I were to zoom in on this area, you can see that if price were to pull back down to the trend line like what it's doing now, okay, a good level for entry will be around the 78 or the 61.8 in line with the trend line. Okay, so anywhere within this zone, okay, as long as it's close to the trend line, this can be your intraday entry. All right, so if your intraday entry, this being the 23.6, this being the 4-hour 23.6, if you guys remember, this can be your stop loss, okay? Or if you want to, if you are a bit more risk loving, you're willing to take on bigger risk, you can use this 38.2 as your stop loss as well. So 2 possible areas for stop loss. All right, but if you ask me, I prefer to keep it tight. All right, use this first one as a stop loss. Okay, price is coming back down. I can play. Okay, over here is my buy limit. All right, entry, and then first take profit, second take profit. All right, the moment price actually hits my first take profit, okay, I immediately close out 50% of my position, move my stop loss to break even. I'm overall profitable already. Just leave the remaining 50% to run all the way to the final target. All right, so this is once you have done the analysis, okay, trading really starts from finding the market sentiment. All right, so the moment, all right, Richard, I hope you remember that. Okay, the trading really starts from finding out the market sentiment. Okay, so once you have the market sentiment, do your analysis. Once you have the analysis, it's all down to trade management. All right, that should be the systematic way of practicing and creating a discipline, a trading system, right? A trading rule, right? Depending on whatever rule you have in the way you analyze, but that should really be the way. Okay, so that's the idea for gold, right? Now, just to answer Ivan, right? I just want to show you guys something. This is something we are in a pre-launch, so it's only going to be open up to you guys, especially for you guys. Okay, just let me refresh this. Okay, so for all for after this webinar, I have to check. All right, but I know that it's not open out to the rest of the public yet. Okay, but there's this FP Markets actually has this VIP room, this VIP platform. All right, where it's really effective and it's very interesting, right? That you can actually do your analysis on it. Okay, and how you get it is actually, just let me show you guys. Give me a moment. Okay, how you guys get it is you guys have to open an account with FP Markets. Okay, deposit 3,000 US dollar. I mean, if you have a live trading account, you have to deposit 3,000 USD with FP Markets, right? And then after that, you send an email. Okay, I'll give you guys the email in a while. Okay, but it's marketing@fpmarkets.com. Send an email with your own email, and then we will actually send you a username and a password to access this VIP platform. So how does this work? Let's say I did an analysis on gold, right? Okay, I'm going to scroll down. Okay, we have already separated it out into the different instruments. So you go to commodities, look at XAU USD, right? There's gold. Okay, it should bring up the chart of gold. Okay, it's loading. Okay, so we have the chart of gold. This is on the 1 hour, right? I showed you guys the trend line just now. So let's say you guys do not know, okay, Ivan, yes, from my understanding, it should be 3K USD. All right, yeah. So let's say this is gold, this is on a 1 hour. You can actually choose a different time frame, but for this purpose, for this demonstration sake, all right, we're using this. Okay, what you can do is you can actually create an analysis. All right, it will tell you, it will ask you, okay, your direction, are you bullish or bearish? Let's say I was bullish, right? So I'll click bullish. All right, then it will ask you, you can actually select whether is it above current price, at current price, which means you hit a market. This is a market stop or buy stop order, so it's above current price or below current price. So generally I'll put below current price, but before we go there, you can actually do your drawing. So let's say I have a trend line, something like that, right? I can draw a trend line in, okay, and then I can also use a Fibonacci retracement from the low to the high. Okay, set up the Fibonacci retracement, okay, something like that. All right, looking for the 61.8 and the negative 27 as a intraday take profit. Okay, so this can be something that I do, and then I just put an arrow and I say that my bias is bullish. All right, so with that I can set it to green. So what I have to do is I just put below current price, okay, and this pivot, okay, it's very easy. All right, just click on this blue tab, okay, and then a pivot will come out. So this will become the pivot level, okay, and then select the first resistance, take profit over here, and then after I can select the first support, probably a stop loss just outside of market structure somewhere below here, right? So it becomes quite a nice risk reward trade, okay, and then I can just say looking to long XAU USD, preference bullish above Fibonacci, key Fibonacci level, key Fibo level, and ascending trend line. Okay, target at negative 27, 20% Fibo. Okay, so it doesn't just talk, you don't put in just like that. This is really a game changer. It's different from TradingView, right? TradingView, you just key in the levels and then it's just static. But this one, what you can do is you can actually highlight key Fibo level, okay? And then you click on this link. You can actually link it to this object, okay? Bullish above this key Fibo level 61.8, all right? And then you click confirm, and then you can also select ascending trend line, link the text to the object, this ascending trend line, okay, and target at negative 27.20 Fibo. I can link it to this negative 27.20. I confirm, and once I have my analysis, I click save. All right, and it will, on this side, it will appear. So if I click unselect all, right, so any user on this platform can actually see, okay, when they come in, they'll see a blank chart. But let's say they see like, oh, there's an Isaac Lim that actually posted this. They can just hover their mouse above and you can immediately see my analysis. If you want to lock my analysis there, you can just leave it there, click on it, all right, and it will lock it there. Okay, and I can even ask myself, like, you know, hey, at Isaac Lim, okay, of course I cannot tag myself, but let's say you can tag somebody, one of the analysts that will be on this platform to assist you. Did I draw my Fibo correctly? So you can actually clarify. So you can highlight the word Fibo, okay, and you can link, and then you can just select Fibo, and then you click confirm, and then you can just send it. So it will be there, and then the analyst, if it's tagged, he can just hover above, and you can see that when I hover above Fibo, it is actually highlighted. All right. So I can actually reply to you. I'll have a notification, right? Of course, Desmond quoted me just now, right? And you can actually, I can actually reply to you personally. I can even drop you a personal message, a direct message, right? So Desmond I actually messaged him earlier, right? So we can go back to the channels, all right? So any new idea will actually appear on the daily setups, right? Like just now I had XAU USD. I can also share my idea to the general room, right? So we have analysts on this platform that will actually send this idea out to the entire room, so people that want to look on it can look at it. So you see, the moment I click XAU USD, it's a blank chart, right? But the moment I hover over it, okay, it appears again. Okay, so this can actually be shared. Okay, I should have shared it earlier when it appeared, right? I should have shared it earlier when it appeared. Okay, then yeah, you can you can actually share this. Give me a moment. Okay, select all, select all. Okay, it's supposed to appear. All right, but either way, that is really how this platform works. Okay, Magun, you're asking, can you practice on this without everyone else seeing it? Yes, possible as well. Okay, you can just draw your elements. You don't have to create an analysis, but if you want, you can also create an analysis. Okay, am I Desmond Leong? No, I'm not Desmond Leong. Why would I be Desmond Leong? Okay, it's Isaac right here, right? My face and Desmond's face, very, very different. All right, don't mistake us. Okay, so in the interest of time, let me just leave you guys the email. Okay, do I work with Desmond? Yes, I work for him. All right, let me just give you guys the email. Hang on, I need to go back to my trading view. All right, and I'm just going to leave this down here. Okay, and I'm just going to type marketing@fpmarkets.com. All right, so just email. Okay, make sure you have an account. All right, make sure you have an account, and then send an email. Okay, to marketing@fpmarkets.com, and then once it's verified, we will send you the username and password. All right, I hope this clarifies everything for you guys. Very interesting platform. Yeah, so with that, right, I'd like to end today's presentation. I hope I have managed to value add. Okay, no, Ivan, I have no idea who's Michael Lim. I don't work with any TA groups, right? Okay, yeah, I just work for Desmond. Okay, and we are the ones that built this trading platform. All right, so you can search my name up, not an issue. Okay, and you can see whatever you guys want to see. All right, nothing to hide. Okay, Edward, is Bitcoin good to protect against the inflation? Again, this is something that is very personal. All right, Bitcoin is very, very volatile. When you're, for me, in my opinion, is when you're protecting against inflation, you want something that gives you more returns than inflation, yet is steady. Okay, so I would recommend an index ETF rather than Bitcoin. All right, is this presentation recorded? I should think it is. Okay, but you can also email marketing@fpmarkets.com, right? And they should be able to send you a recording. All right, with that, thanks everyone. Thanks for your time today. I hope to see you guys again, catch you guys again. Take care, trade safe, stay safe, and have a great day ahead. Goodbye.